In the Forex industry, day trading is a popular short-term strategy among retail traders. It can be a fast and efficient way to see returns on an investment, since they use high amount of leverage and short-term trading strategies to take advantage of small price movement in highly liquid markets. A trader who is able to keep track of their trading charts throughout the day is best suited for day trading. A scheduled announcement such as the unemployment rate, gross domestic product, or interest rate is affected by market expectations and psychology. The market reacts to short-term fluctuation when expectations are not met or exceeded, usually in a dramatic or sudden manner. As a result, day traders need control, focus, discipline, and the ability to stick to a trading strategy to be successful. Here are a few guidelines to consider before starting as a day trader. First, choose the right instrument so that traders are comfortable with the volatility of the pair. Second, decide on the entry and exit price. Third, always place the stop loss whenever open a position. Fourth, take profit when the target is reached. Fifth, close all open positions within the day and do not keep any open position. Sixth, master one instrument at a time. Seventh, know about your instrument well. Eighth, choose the right timing for trading. Ninth, choose the right trading platform. 10. Strictly follow money management. 11th, always trade with proper risk to reward ratio. And finally, keep up to date with important news.